SoFi has been a very chaotic but also at times fun stock to see since it IPO'd in 2021. We've seen highs near 30, high 20s. We have also seen lows for extended period of time below $5 a share. So it's not necessarily about where we've been, but where we're going. I think SoFi is interesting for a number of reasons. I mean, you don't see companies IPOing with so many eyes on them, certainly, maybe in the tech space. You don't see a whole lot in the financial institution side of things. So it's a really unique stock in that sense. We're going to be diving into SoFi. We're going to be covering financial side of things, what I think personally it's going to do, how it's going to perform, things like that in this video. So I appreciate all of you for watching, and let's dive into it. Of course, before investing in a company, you have to actually understand what that company does. With SoFi, it's really not that complicated. They offer lots of financial services, so that includes personal banking, loans, and things like that. You can read through all this if you want to, but I really don't think you need a whole lot of rundown, super dive. It's not this crazy tech stock where you have to dive super deep into the weeds with it. Also, I think how SoFi really differentiates themselves and why they stick out to me is, yes, I heard about them when they were IPOing, yada, 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 but they've really done a good job at trying to build up a long-term user base. So they offered incredible rates on personal banking. You know, when you deposit, what do you call that? High yield savings. When that was a thing, it still is a thing, but it's not as much as rates have started to fall a bit. But it was one of the better ones you could really find out there. I think they had near 5%. I know they're in the upper fours for a long time as well. And although in the short term, you aren't going to make a lot of money from that. If you got a lot of people to move their money into that, open a new account with you or move it to your main account, a lot of people don't want to switch bank accounts every year or two or three. That's just not practical for the average person. So the fact that they're doing things like that. Also, their advertising game, I feel like, is pretty good. They did a lot of advertising on YouTube, not just ads, but like sponsorships and stuff like that, and just well-targeted stuff. So I think SoFi seems to be building up a nice baseline. They're doing things long-term that you would like a stock to do. So we're going to dive a little bit into the financial side next. Taking a look at the PE, we can see that they do not have one. Forward PE also is high, but it's really not that accurate. So SoFi is a company that is just starting to become profitable. In my opinion, and in most people's opinion, you really shouldn't judge PE too much off of that. And there's nothing wrong with a company that's not profitable, assuming they're in that life. You don't really like a company that was trying to become profitable and stay profitable forever to go not profitable, because that generally indicates something really negative is happening. In SoFi's case, this is not the case. They are just becoming profitable, and that's totally normal and natural for companies to do that. When they're in the funding stage or in a rapid growth stage, they just want to increase revenue as much as possible. They want to invest a lot of that quote-unquote profit back into the business, making it not really profit. I mean, it depends on what you use it for, but you know what I mean. You want to invest heavily into the company. You want to get investment to keep going, and then investments will fuel you. And then once you become profitable, you don't really have to rely on that debt and all that. So SoFi is in the middle of that process, and it seems to be working. We can see they were negative what, 40? Yeah, 0.4, negative 0.36. Then we are now positive 0.15 earnings per share. That is good, and we're projecting better next year as well. And we can see. So if we see revenue, this is why I feel like even when you're just becoming profitable, you really shouldn't go off of PE, because slight fluctuations in the profit margin can throw PE off dramatically. PE is more better for companies that have been profitable for 5, 10 plus years. Certainly 2 to 3, you're usually stabilizing there, but there's certainly cases where it isn't. We can see that here. Revenue, yes, we were negative here, but revenue increased 165%. That wasn't really shown in the earnings per share difference between 2022 and 2023. This last year, 37% increase. That is pretty good. And then we're still projecting a 12.5% increase in revenue, which is good. That's better than the average company. Maybe not quite as much as we were expecting, but still pretty good. But we can see we're increasing the profit margin, or the earnings per share, 78% next year. So even if we had a PE, the forward PE would be radically different. It's not that you're becoming 78% more efficient. It's that you're just becoming slight fluctuations in that. When you're even, right? And then you increase, let's say you can get your profit margin to 10%, you're at break even. If you go from 2 to 4 to 6 to 8 to 10, eventually over these years, it seems like you're doubling. And then you're going up 33%. But you aren't really doing that much better. You're just, I assume most of you are catching my drift. So there's nothing to be concerned about the PE, and you really shouldn't even look at it. As long as you're getting revenue increasing like this, That's good. The one thing I would caution with companies that aren't profitable is there is certainly scenarios where you don't necessarily understand what you're buying into, because it's really easy for people to just look, oh, PE 30. Okay, I know this is relatively around the S&P 500. Okay, it's fairly valued then. Or, okay, this is 60. I should make sure this is a company I really want to buy. Or, oh, this is 15. This is relatively cheap. When you don't get that PE to look at, sometimes you can buy into something you don't necessarily understand the multiples you're buying into. I do not believe that's the case for SoFi. Not that I'm saying, oh, $1,000,000% buy right now, because there's certainly people and scenarios where maybe SoFi isn't a good option for you, but this isn't a company that you're buying just crazy, crazy multiples. Let's take a quick look at the balance sheet. So, one thing that's interesting, I do feel like debt levels are relatively low. We can see that their debt level in 2020 was just under $5 billion. Now we're just under $3.1 billion. That tells me that this is a company that is relatively safe, certainly for one that is just becoming profitable. Like I said, if you're investing in a company that's not profitable and they don't become profitable relatively soon and funding runs out, they go to zero. That is a risk. That is a major risk. That's why oftentimes when you're buying unprofitable companies, there's so much upside. However, with SoFi, I don't think there's much risk of that here. Of course, there's always a risk for any company to go underwater, terrible management takes place, and they start doing bad things. That is going to be bad for any company. But these debt levels here, certainly with that revenue, we can see how much grow. I mean, look at the total assets. It went from 8.5 to 36, where we're at now. Equity has doubled since 2020. Not super surprising, but it's still something notable. And like I said, we're starting to get to that point where net income before taxes, hey, we have net income. We are a profitable company. That is something that is cool. That's something that's good to see. And that's why you've seen some of that pop. Hey, we're becoming profitable, all that. So in my opinion, there's nothing here that really looks too concerning. It may be slower than we expect, and now you might run sideways for a bit. I feel like SoFi, this is a really good baseline to run up from. And like I said, I feel like the practices they're putting into place are good, but let's dive into something else a little bit real quick. I like to take a look at historical PE in these videos. Believe it or not, you all know this, they do not have a PE. They are just becoming profitable, so we can't do that. Let's take a look at historical revenue. And we don't even have a super long time frame for them as well, because they only really IPO'd early 2021. So we don't even have a full 5-year time frame, but let's just go off what we have. There's still important information here. We can see first quarter, just under $250 million in revenue. Not a whole lot. And we can see that there was some expectation they were going to grow and grow relatively fast, considering they IPO'd somewhere around this, right? It says we're up 22%, so I can assume they're 22% less, but maybe I'm reading that wrong. Doesn't really matter. They are growing revenue quickly. By late 2022, they were growing over $500 million in revenue. Now we're sitting at just under $1 billion in revenue every single quarter. So 2 things can be true at once with this. Well, 3 things, honestly. First, incredible growth in revenue, although, like I said, it was expected. Some of that was priced in. Okay, the 2 important things that I think I want to make a distinction here. 2 things can be true. They will likely not continue to have this revenue growth. You're not likely to double revenue every 2 years. Most companies do not do that. They're in a time frame where it was easier for them to do that. But another thing's true is if they can even get some of that, if they can continue that for another year at that pace, another 2 years at that pace, if they can even get half that, you're growing doubling revenue every 4 years. That is still fast. That's fast. It's going to get harder the more you grow. But if they can grasp some of that, if they can continue that, that is going to be very, very good. It's going to be very, very good. And you're going to see appreciation in your stock and your shares relatively fast. Because like I said, companies generally do not do that. It certainly does happen, but if you're going up 200% every 5 years in terms of profit, which in our sense, we're just trying to grow the business as much as possible. We grow revenue, and then the profit will follow that, hopefully. So I'm optimistic by this. Now, I'm like I said, I'm not projecting them to double every 2 years. If you do, you should buy a lot of SoFi stock, because that's going to be very, very great for you long term. But anyways, it's still very, very good what they've been able to do in this short time frame. Of course, every company has unique risks and advantages, and it's important to weigh these before you invest in a company so you actually know what you're getting into. SoFi has quite a few on each side. So let's dive into some of the risks first. First one being, SoFi isn't I've talked about this over and over. Just becoming profitable. There is an assumption with companies that are not profitable or becoming profitable or just starting up. There's association with more risk. And when the market dumps in a recession, something like that, yes, every stock's going to get hurt, but some are going to get hurt worse. Stocks like utility companies are going to hold up better. They pay dividends, things like that. People are going to associate SoFi with more risk, and it's going to be probably one of the first stocks people go to dump. So that is a risk inherent with it. For better or for worse, even if the business itself is doing good in the recession or in the scary time, whatever it may be, 100,000 different things it could be, there's still going to be an association of risk. So understand that when you're investing in SoFi. Another thing, economic moat. The unfortunate reality is they're in a competitive business. It's not like a TSM or an ASML where they have 85% of the market share. They're the only people with the advanced tech. No one else could copy them because they have all the patents and things like that. That's not the reality of SoFi. And for better or for worse, generally for worse, that is going to be it's just a disadvantage. You're going to have a ceiling put on you as well. And that's another thing with the business itself. Although they can still grow a lot and there's plenty of room to grow, you're probably never going to grow like an NVIDIA. Now, no one expects their stock to grow like an NVIDIA. Maybe you do, but it's probably a penny stock. Then you expect a lot of them to fail as well. I'm not saying SoFi can't do great or amazing. You're not going to go up 2,000% in 5 years unless you're basically bankrupt and you're rebounding. It just doesn't happen. It traditionally doesn't happen. So there is a ceiling to this. That's just reality. Now, those are some negative things. I don't hate SoFi. Let's dive into some great things. I think their leadership clearly is impressive. I think the strategies they're going down for growing a long-term business in terms of, like I said, the getting people opening up accounts and things like that, offering great, I already talked about high-yield savings accounts. Everyone would recommend it on personal finance. Hey, you can get great rates with SoFi here. Things like that. Advertising in the right places. Just making good long-term decisions, growing revenue. I know it wasn't a lot, and people expected them to do it, but growing revenue from $250 million to $500 million to $1 billion every quarter in 5 years, 4 years is very impressive. It is. So I think they do have good leadership. Now, it hasn't been around for 30 years. If they have a couple bad years, something like that, I may change my tune. But there's nothing inherent in the earnings that scares me. A lot of the fluctuation here, yeah, it's not great when you have a company that goes from 23 until 4. But there's nothing in the earnings that indicated they were doing worse. That's just what people think of it. And what people think can be very different than reality. I'm assuming there's a lot of new people watching my channel, but most of you who have seen my content before know I'm not the biggest projection guy. What do I mean by that? I don't like saying, hey, in 3 years this company will be X. Why don't I like doing that? I think there's lots of factors that go into it. The market. Is the market dumping right now? Well, I said it was going to be at 30. And the market's dumping, so the S&P 500 is actually lower than me recording this video. Of course, it's not going to be at 30 if that's the case. I mean, unless it's doing incredible, which is possible. But there's so many factors, so I don't like necessarily going, oh, this is going to be this by this. I do like saying, compared to the market, compared to the S&P 500, which is what we're basing everything off of, I would hope, full disclosure, I do not invest in SoFi. Doesn't mean I don't like it. It's just, I only have so much money, it's finite. However, if I'm investing in SoFi, I would expect it to outperform the market. Why? I'm taking risks like, hey, this is just becoming a profitable company. That is a risk. It is a risk. So that's the main thing. However, if you had me personally project, I would expect this company, how do I say this? I expect the earnings to grow. I think it's going to outperform the market in that sense, in terms of revenue growth and earnings per share growth. Whether the market agrees that's enough to give it outperforming the S&P 500, we'll have to see. But I do think it's going to outperform the S&P 500 in a 5 to 7 year time frame, assuming the market holds up, there's no major recession. I think SoFi is clearly doing good business practices and things like that. Now, it's easier for me to say that while I don't have any money backing that, but this would not be a company I'm scared to have my money in. Now, I wouldn't want it to have 20% of my net worth in it. I wouldn't want probably even 10, but I don't think this is a terribly bad bet. I think, like I said, I really, really, really like the leadership they're doing. If it was just a different industry, if this was tech, I would be all in. Not all in, literally, but I would be a lot more sold on it. My biggest worry is the competition of it. It's just a tough business to grow in. But like I said, I think SoFi will outperform the market in terms of revenue growth, in terms of earnings per share growth over a 5 to 7 year period. And I do expect it to perform roughly in line or above with the S&P 500. So that's what I personally expect it to do. If any of you guys enjoyed watching this video, I appreciate it if you like and subscribe, especially if you are new. I do appreciate you for watching the videos this long. This is a long video. And I appreciate you guys for giving me the time of day. I cover lots of similar stocks on this channel, literally do daily stock content. So if you did enjoy it, I appreciate if you stuck around, subscribe to watch some other content I have. But anyways, I appreciate all of you for watching, and I'll catch you next time.